Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session here with my team, Chris and Tyson. We've got a lot to chat about this afternoon. Hopefully everyone had a fantastic weekend and is ready to rock and roll this week. We've got discussions around the stimulus. We've got discussions around Brexit. You can already see that there's been some pound action already today. There's obviously some conversation. We're going to go ahead and talk about that, but also more importantly, we're going to go ahead and take a look at the technicals and how the technicals are actually telling us what to do, whether we should be buying or selling based on the way the market's set up technically. Now, without further ado, let's go ahead and jump straight into that. I'm going to go ahead and introduce Chris and Tyson. Good morning. Good afternoon, guys. How are you doing? Mike, your mics are muted. Let's just make sure we get that done.
Oh, yeah, we listened to you earlier. Gary said mute your microphone. We didn't want to interrupt your intro.
You are right.
Yeah, doing really well. Super exciting week. A lot of news to talk about today, so make sure that you tune in. We've got between, U.S. government shutdown, COVID stimulus, vaccines going out worldwide, Brexit, current directions. We have some IPOs this week. We have a lot of stuff to digest, so looking forward to today's session.
Absolutely. Tyson?
There we go. I thought I unmuted myself. Good. Yeah. Good to see you guys. Yeah. Exciting times. I use this word a lot, but I don't know if it's ever been more valid than now. Living in an oxymoronic type of world. Amazing money-making opportunities on one hand, and some things that could fall apart on another hand. So we've got to let's keep it simple, but there are amazing opportunities out there, but we need to make sure we pick the right asset classes and the right currencies to trade in.
Yeah. Yep. So I think that it's all going to get tied into this week. Look, I don't think that Congress is looking good in the eyes of many people out there as far as citizens. This might be the week that they shut themselves in, finally get something done. Friday, December 11th is supposed to be the U.S. government shutdown deadline. And so if there's not some type of spending bill passed or some type of debt ceiling raised, the U.S. is going to go into a temporary shutdown. We're going to start seeing furloughs and, again, kind of a way to derail sentiment. So I think with the compromise we've seen between, the Democrats, Republicans, between where we're at from a, $2.2 trillion stimulus package for round two versus a $500 billion stimulus package, it looks like the compromise is 900 and some billion. Now, if we have the shutdown averted and in that shutdown spending bill, we also include that $900 billion, then that essentially is allowing Congress to go in and pat themselves on the back and say, hey, look, we did it. We're not worthless after all. So I think that's going to get tied up this week. Now, obviously for us and watching the markets and seeing how things are priced in this week, it'd be the sooner the better, but it wouldn't be surprising to me if they somehow take this to the 11th hour and it's like a, final hurrah for Thursday, Friday. They go into holidays with, the celebration of like, look at what we've done. Look at we've averted, we've averted a crisis and we're saving everything. And, now we have vaccines that are being distributed worldwide. So our job is done. So I feel like, as far as what things have been seeing, what we've been seeing price-wise in the markets with new highs in the U.S. indices and, sentiment is overall bullish. Like Tyson said, oxymoronic. I was reading an interesting article this morning that it's kind of like playing 3D chess. I mean, last week we had a, horrible jobs report. We had 200 and some thousand jobs for the U.S. We still have 700 some thousand continued claims of unemployment. COVID cases are rising rampantly again. We have shutdown measures going on throughout the country once again and throughout parts of the world. Vaccine is being distributed this week in Europe. It's already available in Russia, available in China. And who gets in the U.S. depends on what you're doing. If it's, essential workers, healthcare workers, assisted living, and basically healthcare facilities. And people need it. But nevertheless, this week government shutdown is a big deal. That's Friday's deadline. But I think that, again, it's like, what is it? Maybe once or twice a year, Congress works together and does something that they think is great. And so this might be that one time a year where it's like they don't want to be blamed for the market to fall. I think that this is something that could be bad enough where the market could fall because it's essentially derailing, what we've been kind of pricing in, which is stimulus is coming. The hopes of a stimulus is allowing to keep this thing going. The bears are non-existent in the markets right now. So why be a party pooper when you can just approve $900 billion and we'll pay for it later? So
well, this is the thing.
I gotta say something that I think is very, very important because this so much reminds me of. So I had a couple colleagues and really close friends that were and still are, and they made it through the mortgage crisis in 2007, 8, 9. And these guys were very, very smart, and we had conversations in 2006 and 7, and it was just such a weird time because we knew it was coming. We could see it coming. We knew what these mortgage companies were doing, and the writing was on the wall. Yet the market in late 2006 and in 2007 continued to rally up, and there were so many at the time. One of the things that I noticed is there were a ton of options, iron, condor, and credit spread newsletters coming out because it was so easy to make money during that time. It reminds me of where we're at right now. I said this for the last few years. I've been bearish on the entire stock market, and obviously was a little bit right in March, but I don't think that that's all we're going to go through. But here's the deal: it's we're in a scenario where it's like it seems like all the market does is go up. And one thing I've been saying for the last few years is I haven't seen a part of euphoria yet. I haven't seen that euphoria. It's here. This is euphoria. We are in euphoria now. Somebody could argue like, well, no, we're not in euphoria because the savings rates and disposable cash and all that is up. You're right, because it's being subsidized by the government. What happens when that subsidy is no longer there? And so what I need to have everybody understand is I believe 2021 is probably late 2021. Second half 2021 is probably going to be more important for you guys to be around us and your education than any other time that we've ever been together, because that is when we're not just going to see volatility, but we could see moves like we had in March, but we could see that for an extended period, not just for a month or two, but we're talking for 6 months, a year. These could be massive moves because we got to figure out, are we going to just snap back and is the economy just going to get back on track and everything's great and all that? Or is the market moving up because there's nowhere else to put this disposable income that you and I have now because we can't do anything. So we might as well invest and all that. So we got to figure this out. And I think the market is going to be poised for massive movement. And just like now, there's going to be those that make a lot of money and those that get really, really hurt. But you got to be around us more often. I'm pretty bearish, but I don't want to be bearish wildly. I want to take advantage of the opportunities that are here right now.
Agree.
And when you say bearish, you're talking about stock market bearish. Is that right?
I'm stock market. So I'm stock market neutral between now and the next 6 months. I'm super bullish on a couple euphoric sectors, the SPAC sectors, the technology sector. I think money's going to continue to flood into that. I think it's going to absolutely get drilled second half 2021. I think everything could potentially fall apart because that's when the economy is really going to have to stand on its own.
Are you? Have you put money with Facebook?
I don't have.
When Tyson says the economy, it seems like more or less the house of cards. That seems to be the economy right now on its own, standing on its own 2 feet. I feel like, what legs does it actually have? Like, what truly sustainable, jig-jed legs do we actually have over the next 12 to 24 months?
And the saddest part about all this that really is just super sad, and who knows how we're going to come out of this, is the gap between the haves and the have-nots has grown. I mean, everything, turn on the financial news and it looks great, but man, mom and pop business owners, the average person is going to come out of this and they're not going to feel good. And so it's going to be, I don't know, it's going to be interesting on how we all come out of this. But no matter what, as we always say, there's going to be opportunity.
Sure. And it's honestly like this. I think that this year has been like one of the best times to be learning how to trade, because I think that you could have made a lot of mistakes this year and still made money. Yep. I mean, the amount, think about it. Like, if you had the courage to take cash and be willing to invest at literally like any time, I feel like your winners are way, way bigger than your losers. Like, unless you bought the high of February and didn't do anything for the next 2 months. But it's like, if you put any money from March, April to any point from that point forward, I mean, I've seen more triple-digit gains this year than I can remember in my entire life of trading stocks.
But you had to diversify your portfolio, because I went through some drawdowns in my currency trading, but I've made a tremendous amount in my stocks and my cryptos. I had to have some diversification. So it's not just putting all your eggs in one basket. It's also understanding kind of the overall.
Yep. I see
absolutely.
Kathy,
absolutely.
Gary can't get a word in, so Gary, take it away, man.
Hey, listen, you guys, I want you guys to chat it out and to say whatever's on your mind, but at the same time, we are limited in time, and I want to get to the next topic here, which is Brexit. We've had some news come out today. In fact, if you go to the news calendar, you can see that. And by the way, Chris, the jobs may have come out a little bit lower with regards to the employment change, but to be honest with you, the average earnings has ticked up, which I keep a close eye on, as well as the unemployment rate has gone ahead and shown also a little bit of a positive move as well. So it is slowly, gradually moving better, even though I don't expect the employment change to change drastically right now. But I think over the next few months in the new year, I think that'll definitely start changing, depending, of course, what happens with COVID. But moving on to the next subject, looking at the news, we did have the UK Prime Minister Johnson that said that they were ready to pull out of the talks within the hours over the EU demands. So clearly they're not seeing eye to eye on that. We did see a spike in the market. If you take a look at the technicals, this is the pound Canadian. We had a big spike down in today's trading. If I go to the 1 hour time frame, we can see a little bit clearer what happened there. This will be the 1 hour right here. So we had a big spike down around about, looks like early morning trading. Let's see here. Yep, 2 o'clock. So 2 o'clock in the morning Eastern Standard Time, we had that big spike down. It was 2 hours of just market dropping. Let's take a look at the. We looked at around about, you can say about a 190 pip drop, but it's gone ahead and recovered back, probably almost 80% of that move. So it's, a drop, but it's come back and retraced back again. You can see that how it looks like here on the daily right here. So despite of all of this right here, tell me, Tyson, what is your game plan? We'll get into the technicals in a moment right now, but what is your game plan on Brexit and the pound crosses at this point in time?
Yeah, great question. So I posted a trade short the pound CAD a few weeks ago. Shared it in Smart Trader too. I think I shared it out to everybody. It was on November 10th, and shared that out. Actually, it was part of the Money Flow trading room, but shared that out, and that hit a target. Had a target of 7105. That hit a target today. But here's what we've got to do. We've got to look back. I love where we're at right now, because we've had these scenarios over the last four and a half years since we've had Brexit, and it just boggles my mind that it's been 4.5 years. I mean, that's crazy, and we're still not done. Still have no clue. But every time, here's what's happened. Here's the pattern. Something negative comes out. No, it's going to fall apart, and this isn't going to work, and all this is horrible. Pound sells off, only to find a floor and rally up. So just looking at this historically on the reactions that we've been getting, this is in my mind, this is a buy the news or buy the rumor type of thing, and let it ride. I think we're going to see this be bought. I think that cooler heads are going to prevail. And the pound CAD, I love the pound CAD, is going to rally. It's actually my favorite trade, one of my favorite trades for this week. I think you could actually really do it simple. So I look at the headlines and I say, hey, great, flush this thing down, take some profits in the pound CAD. If you were short, I was talking a while ago about shorting the pound dollar too. Take profits in that, look for opportunities to start buying. And I look at the pound CAD right now, and I think it's a pretty simple trade. I think you could literally just take today's bar, buy on a break above today's bar, and we have an up D extension sitting probably right around, I think 175 could be a good target, but target 174.50 to 175. Buy on a break above today's bar, put your stop below today's low, and I think you're going to have a really nice trade that kind of snapbacks, rallies, and over the course of the next 1 to 2 weeks gives you some really nice profits.
Okay, so let's go to the technicals right here, and let's take a look at the overall consensus of how the technicals are set up. Now, I agree with you with the pound Canadian, but I do not agree that rallies due, maybe in a correction move, maybe a short-term correction, maybe that's what you're looking at. But if you look at the way the market is set up long-term, we're in range bound, and we've just come off those highs at the top right here. We're looking at bottoms right here. Now, let's take Brexit. If the UK decides to not go through with a deal with the UN by the end of the year, that we're looking at a very aggressive, and in fact, we're looking at a bearish move on pound. If that's going to be the case, then pound CAD should continue to move to the downside, to the bottom of the range, but then also move back down towards its target based on this big large swing that we've had right here. And it's coming off from the top there at about 2.0962, around about there. And the target to the downside.
I agree with you 100%. So I wouldn't expect a move above the prior swing high of about 74.95. So I think we have to have our target below that. So I think right now, you're right. We're ranging. We're sitting at the bottom of that range. I'm going to look for a push back up to 74.50, right about there. But I think that prior swing high is going to hold, and then we're going to have that next leg down.
Yeah, retracements do, but I think overall, it's going to be bearish. But I mean, that's again different strokes, different strategies of how to be able to trade that would obviously depend on your outlook at that particular time. So, I want to remind everyone,
kind of like we had in the Aussie New Zealand, where you were ultimately right. The long term, you were right. Let's wait for it to crush down and buy at lower prices.
Absolutely.
But I think this will be one of those cases where we both can be right. We can get that flush higher. You can look for a nice target on the upside, and then take your profits and either short or wait for that flush down.
Yep. Yeah, I agree. I agree totally. Now let's take a look. So pound CAD. Now let's take a look at the overall direction. Let's forget about the short-term correction, because there's always going to be short-term correction, and I really encourage each student that is watching these particular pairs to get involved in the trading rooms. Tyson's, Chris's, mine. Get involved in the trading rooms, because we'll talk about the nitty-gritties. We talk about the inside trading opportunities that are available there. Just like, of course, pound Canadian is actually setting up with a great target trading setup this week. We've got a couple of trades already running. We're in the money on those trades. But so you need to know that there's different strategies to trade, different setups. And we're bullish on target trading right now. Target trading max is bullish. And again, get into the trading room so you can get more details of the actual trading opportunities with inside the larger picture. Now, if you look at the larger picture right here, Chris and Tyson, we are bearish. I would agree that, or would you agree that we're long-term bearish on the pound CAD just until, look, I'm going to say long-term for me would be down to about 158 and change, or down here, just to get to the bottom of that range of the pound CAD. I have been bearish on this for a long time as well, and as you can see right here, selling pound CAD. We've been selling pound CAD all along since last week, so we're all bearish with pound CAD. Let's go to the next currency pair. Let's take a look at the pound JPY. Chris, talk me through the pound JPY right here as you look at the setup that I have right here, and do you object to or are you looking at a different setup on this?
Pound CAD I agree with. I mean, pound CAD is like range. I would love if pound CAD came down to 5,800. I would be friggin' stoked. Like, that'd be an amazing level to buy that thing long term. Just sit on it for 6 months, 12 months, and make a 2,000 pip profit over the course of the next year. Pound yen, I keep going back to the yen pairs and how difficult they've been as far as follow through. Right now it's like we've seen the yen give back a lot of grounds to some of those risk-on currency pairs. The pound had some love last week. The pound was one of the stronger currency pairs, and then it's completely flipped because of Brexit so far. So it's like, I think it's temporary price action in the pound. Honestly, Gary, if I'm going to pick, pound yen's not one of my currency pairs that I like this week. Part of that is
what pound pair would be?
What's that?
What pound pair would be? Let's move to that pound pair. Let's take a pound first. What?
Yeah, so we tend to have this conversation like, you've got your kind of swing trading. Tyson's got his style. I'm looking at more short-term stuff this week. I think that my plan for pound crosses this week is going to be what happens between 2 and 4 in the morning. What happens around that London session open? You know what I care about this morning, Gary? Within the first hour of trading for the London session, there was over 100 pips of profit on almost every pound cross. That, to me, I don't have to take a position. I don't have to be a swing trader. I have to level in. It's like I can take good price action through the day and walk away with 200 or 300 pips for a pound basket. And they're all going to move the same direction, like pound Aussie, pound CAD, pound Swiss, pound yen, pound New Zealand, pound dollar, and then the euro pound goes the opposite way. But you've got all 7 pairs completely moving relative to how the pound is going to be stronger week this week. So I think if I'm going to pick, like, I'm looking at short-term stuff. I'm watching 1 hour price action. I want to see what the candles are going to do from 2 in the morning to 4 in the morning, and I'll make my decisions based on short-term. So that's my approach.
I think it's good.
If you want to zoom out and go to the weekly chart, I would, give my best outlook, but I don't really have any long-term stuff right now because I think it's so short-term oriented this week.
No, Chris, I think I'm completely on the same page with you with regards to the short-term opportunity. And that's why I said traders need to get into the trading rooms to get those details. And I definitely feel like what you've just said now regarding the pound crosses, that the opportunity on the pound crosses would not necessarily be a long-term outlook unless you are holding positions long-term and you don't want to get too active during this period of time. But if you're looking for quick pips and quick profit potential right now, then absolutely get into the European session. Look for those breakouts for the London breakout, because we've just looked just today alone at 2 o'clock. We've had breakouts that took us on this particular pair right here. This is the pound Canadian, pound yen. And if we look over here at 2 o'clock, we had a 171 pip opportunity. If you look at the pound Canadian did the same thing right here at 2 o'clock. It broke out, and we saw price moving around about 180, 190 pip move on that. Let's go to pound Swiss franc. Same thing. We definitely had a lot of movement out of these pairs. This one moved about 140 pips. Pound New Zealand dollar. Same thing. Look at that breakout there. Another almost 200 pips, 192 pips. So the opportunity is definitely on the breakouts in the London session. The question here is, Chris, are you going to get up this every morning for the next couple of weeks to trade those pairs?
No, the next couple of days. Doesn't mean the next couple of weeks. I mean, if it's all going to be jumpy this week, it's like it's worth at least entertaining and getting up early this week and see how the London session treats me. Okay.
And heading into the Christmas, well, just before Christmas, that week before Christmas, not going to be doing any. It depends, of course, right? Depends on the news, what the news comes out.
Yep. Yeah, it depends. But it's like with Brexit front center this week, look, it's Monday, and look how the market started that London session, really volatile. So I'd say the pound pairs are probably going to be subject to maybe 2 or 3 really high volatility days. Maybe Friday's a calm down, maybe Friday's a balanced day. Of course, we can think that it's like we don't have sustainable high volatility. That's what's so like Brexit for 4 years is annoying because it's not sustainable volatility. It's like this week is super volatile. Next week might be nothing. Last week was kind of volatile. It's like it's been really inconsistent. So I'm trying to strike while the iron's hot, and I'd be willing to be up and trade more of the London session this week.
Right. I think it's a good approach.
FX, you should trade option spreads on the FXB, Chris.
Yeah.
The pound ETF. I'm going to throw a curveball at you guys.
Okay.
I love your idea of trading short term because that's opportunity now. But I also love sleep. So it's one of those things. It's counterbalanced, but I totally understand it. So I mentioned that I'm shorter term bullish on the pound CAD. I think Gary's going to be right. The flush down, I don't know if we're going to go down to 58, but I could totally see 68, 66, 60, 65. Yes, I think that's in the cards. But short term, I think we're going to have that bounce higher in the pound CAD. But I look at the pound dollar and I'm like, oh, I kind of like the sell side on the pound dollar, just simply because we're sitting so high on the curve and all this, right? So in fact, my top trade for this entire week, if we think about that, if I kind of like the rally in the pound CAD, but I kind of like the short in the pound dollar, I really love the dollar CAD long. It's actually my favorite trade. It's my top trade for the week in the Money Flow trading room in Turning Point Max. We've already started to get into some positions. So I'd like to get your guys' opinion on that. I don't think it's going to be a massive run, but I think it could be sustained for a week or two, maybe a little bit longer. But I'm just looking at this. I look at this and I always think, well, whoever wanted to sell has likely sold. We're sitting at lows. We're hitting de-extensions all over the place, sitting near levels of demand. I think we're due for a bounce soon. So I'd like to get your guys' opinion on the dollar CAD kind of swing trade, maybe back up towards this 131 level.
What do you think, Gary?
Let's jump to the actual chart right here and let's talk this through.
Yeah.
So you said dollar CAD, right?
Yes.
Yeah. Dollar CAD, I'm actually bullish right now. Dollar CAD, I'm already buying in. I've already leveled in over here, but I'm waiting for the price to get above 130. I'm going to be very conservative on any add-ons until we get to either the price of 126. So if we get to 126, I'm going to be buying back in at 126. And if we get above 130, then I'll be pretty confident getting into more buys above 130. So 130 is my it'll be my confirmed bullish level right here. But below this, I'm going to be conservative until we get to 120, 126. And then I think it's 126.36. Yeah, around about there. And then I'll go ahead and start looking to buy in again. What I did notice that we are at is a lot of support coming off this level right here from this FX trilateral box right here. These are called liquidation levels, which is support and resistance. And we can see right here we do have a liquidation level that's acting as support level. And so there's a good chance that price could go ahead and move back up again, because if you look at the way the markets have been set up wave structure wise, we can see that we have a large swing. For those that don't know, let me just go ahead and show them. This is a large swing right here, but inside we had a wave 1, 2, 3, 4, and 5, which means that this is a wave 1 large swing. This is a wave 2 right here, and then here is wave 3. So we're in a wave 4. Now wave 4 could mean consolidation too. So that's why I'm excited. If we do trade back above 130 right here, that means that price is going to go ahead and try and test this high right here at the top, and then go ahead and sell off back down to 126. So 126 is going to be my fifth wave completion. But if we get back above 130, we're going back up to 134 right here, and then we're going to turn around and head back down to 126. I like it, and you guys know, I like to find turning points in the market. That's the ideal place, because once you can identify market direction, you have a great opportunity to be able to take any sort of deployment systems or whatever and deploy it in that direction, knowing that you have a high level of confidence that you got the right direction. Now you just need your logic to be able to trade it for you in automation. And just like Tyson, I love my sleep too. In fact, my wife says I need a lot of beauty sleep. All right, I don't know what she means by that, but she says I need a lot of beauty sleep. So the thing is this. Coming back to the London breakout, coming back to what Chris spoke about, the short-term opportunity. There's great opportunity to use the London breakout strategy in order to be able to use automation to have that beauty sleep, to have that sleep that Tyson wants, and using automation to be able to trade that, because I believe that systems are best used under the right environment and the right condition. Now, the London breakout strategy may not work right throughout the year, but just like Tyson, or at least Chris mentioned, right now is a great time to use that strategy during this period, maybe just for this week. And if you look at the system this morning, you would have seen that that system paid probably out on all of the pound crosses with the move that we had right now. So you can use that system to be able to manage the trades for you while you're sleeping, and to be able to reap the benefits from automation, but also from profiting from the breakouts. So anything you want to add to that, Chris and Tyson?
Well, I was just gonna say, what strategies would you use? We got a lot of people watching today. Like I, for one, if I'm gonna be up, I'm using price action. If I'm gonna be setting a robot up, there's some possibility that if I have the right structure, I can look at right trader max above or below certain levels, or I could go just pure price action and trade small with maybe that little secret martingale strategy multiplier, but use like the sentiment strength line and the micro price detector and go after some of those. I mean, and I say that because if we used micro price detector and had 100 some pips sell off and then had a 50 to 100 pip rally, I mean, you're looking at, for 3 to 4 hours, you have like 200 pips of downward movement from high to low, and then from low to high, you get like 200 pips of movement. You're bound to capture something of that. So I wouldn't be surprised. Again, this is like the one kicker that we need. As long as we have decent volatility, those robots will clean up. So I think the micro price detector this week, SSL, looks good for me. That's probably what I'll talk about tomorrow in my trading room, and looking to set it up for this week for me to make it. So if I want to get some sleep, that's an easy way to do it. But what do you guys think for you?
Oh, I think you're spot on. I would add in even a right trader into that shorter term kind of trading, right trader, SSL, micro price detector, trading the short terms like you're looking to trade. For something like the dollar CAD, I've got an ultimate target all the way up to 135, 134, 135. I think we're going to get up there. So it's more of a swing trade. So I like setting this one up more on kind of a monthly trade. I could put this in this is going to sound kind of crazy, but turning point traders will know what I'm talking about. But use the monthly turning point on a 30-minute time frame. So you're like, wow, you're trading a monthly time frame with a 30-minute chart. Well, we look for 30-minute supply and demand levels, which take an hour to form, and they don't form all that often. So once we get in, we hold those trades. We can hold those trades for a week or 2 or 3. But I love using Turning Point Max on the monthly settings on a 30-minute time frame on this dollar CAD trade for more of a swing trade. And Gary, I agree 100%. I've got it analyzed where price could go down to that 126, 126.75 level, and I want to start buying there too. But I like to make things easy for myself. If I have an ultimate target up to 134, 135 and something like the dollar CAD, I have a strategy that does a really good job at buying near or around these turning points. I'm just going to turn on Turning Point Max, put on the monthly settings, and let it go.
So let me add to that now. And absolutely, there's different ways to trade breakouts in the London session, right? There's different ways to trade it. Price action, using automation, using logic, using indicators to confirm it, but that could be a little late sometime. So there's different ways to do it. Price action is obviously going to get you in quicker, but that is more of an advanced strategy because you've got to know when the right timing is and be able to know and understand exactly where to place your stop loss. You need to know all that stuff up front quickly and be able to react quickly to the market. Using automation is taking logic into it, but normally in that case, it's a lot of the times it's using indicators. But if you use the London breakout strategy is just based on time value, right? Time and where the value is at, and does it break through a level. And if it does break it through a level, you start executing the trade, and there's fixed stop losses and take profits. So for a new trader, for someone that's completely new to trading the breakouts in the London session, the best for them is to go ahead and approach it from a basic London breakout strategy, which we've got EAs built for that system or for that strategy. But if you want to get into more of a advanced strategy based on price action and be able to understand exactly when the best timing is, and then maybe go into Chris's session, find out a little bit more about what Chris is doing, because obviously he's got something that works that's working for him, and he may want to share that with you. In fact, he will share that with you. So I'm going to go back to and I always like to take visuals or these concepts and put it into visuals so that the student can understand exactly what they're getting into. We spoke about Right Trader Max. And the most important thing about Right Trader Max that everyone needs to understand is that you can't say, well, deploy Right Trader Max in that direction, because it may not be the right time frame that you've got it deployed on. So not only do you use a system, but you have to know what time frame to use the system on, because let's go to the chart right here. Typically, if we take a look at the pound Canadian, we had that breakout that took place. This was the breakout here early morning right here. Now, if you've deployed Right Trader Max on a 1 hour time frame, there was no opportunity to get in here because the signal has already been placed all the way up here to the top. There was no add-on signal here. So you could not get into Right Trader Max if you had deployed Right Trader Max at the time. You had to be well prepared earlier, last week already, starting to sell it and pick up trades over there. So now let's go ahead and move this down to a 5-minute time frame. Let's take a look at the opportunity on a 5-minute. So here's the 5-minute right here. And then if we look at the 5-minute and look at around about 2 o'clock this morning, here's the 3 o'clock candle. Here's I believe here is the 2 o'clock candle. Now we're starting to see a little bit of action, but still on a 5-minute, we're already in the sell zone. We already started selling early in the Tokyo session. So even the 5 minutes is not giving you the opportunity based on the breakout that we had. It came way too early. Let's go to the 1 minute. Now we're getting really close to the market. But you know what? We're looking for the best time frame to go ahead and trade this. Now we're looking at 2 o'clock in the morning. Take a look right here. Now what's important that you need to know is we need price to be above and then need to be below. So at 2 o'clock in the morning, we didn't have, before 2 o'clock, we had price moving above the ribbons. And then we saw price moving below the ribbons right here, giving us, just before 2 o'clock, a signal to trade right here, 156. So what you can do is go down to 1 minute time frame. Now, I'm all about, listen here, we need to know exactly what levels we want to be selling above or below. So in Right Trader Max, we have the option to actually go ahead and put in levels and say that we don't want to be buying or selling above this level right here. We can say that sell below this level from 2 o'clock in the morning. And if price breaks through this level at 2 o'clock in the morning, you're going to start selling as long as the conditions lined up. So you can use systems, 1 minute, 5 minute, 15 minute, whatever, and use levels to define what levels we want to be trading below. So that you don't get caught up in a trade that is not broken yet, but also at the same time have the confirmation that you need based on the system that's running. So very importantly, and I come back to the trading rooms, right? I come back to the trading rooms and I encourage every single one of you that are inside this the session today to get into the trading rooms and to learn from the best. Learn from Chris, learn from myself and Tyson, learn from Tion and Tad and the Chief about how they can take systems that they have, make an adjustment to the system, and trade it during these times like now. It doesn't just have to be a basic system like the breakout strategy with the breakout, the pound breakout trades, right, in the UK trading session. It can be price action. It can be using systems with a couple of adjustments so that you know exactly what time frame to use, what settings to use, and of course, more importantly, what targets to chase after. Because when you're looking at a swing-based system, your target may be a little bit further away from where you normally take profit compared to what you're going to have now in the London session breakout. So you've got to look at all of that stuff. But the only way to find that information is get involved in the trading room. But I think there's great opportunities, just like Tyson and Chris have spoken about. There's great opportunity between now and I'm even going to say next week. I know Chris is looking at this week, Chris. I would even say next week, because we've got Brexit talks to conclude a deal by the end of the year. So even though they're saying this year, and the UK's done it before, it's no surprise that Prime Minister Johnson has not said this before in the past. He said at one point that, hey, there's no ways we're going to put a deal together and say, okay, we're talking to the UN right now. So we have a lot of the stuff where it goes whoop and then back again, and then price moves back and whoop. It's just like, it's going to happen. It's going to happen between now until the end of the year. Now, whether or not things happen before that, that there's a final decision, well, we'll have to wait and see if that happens. And obviously that will, stop the volatility or move the market in the direction one-sided. So we'll see.
Yep, and it's exactly what we saw last year. we had the big Brexit vote in December, so the market was moving way ahead of it, like 1 to 2 weeks ahead of it, and then the talks just got kicked through the end of the year, and they resumed this year, and then everything was kind of quiet with Brexit talks this year because of COVID. But here we are circling back, and it's amazing how fast. Thinking back, like we all were trading Brexit 4 years ago, and thinking about how we've had so many of these like windows of like, man, it's such a good opportunity to trade, but it's also been more and more like I use the word annoying a lot, because it's like, why can't we just sustain it? Why can't we just have something where it's like it's good for the pound or it's bad for the pound? Let's figure it out. But instead it's like it's good for 2 weeks, and then it's great for 2 weeks, and then it's terrible for 2 weeks. It's like, so at the end of the day, we still see a lot of like high volatility structure where pound pairs really don't have big trends out. 2019 was a great trend on pound pairs, but this year they've been like really start, stop, and some big explosive moves that completely get wiped back. So I think if you're long term, Gary, with target trading, all your traders to target trading will probably just clean up on pound crosses. It's like if we just see like just it gets beat down for a couple of days or a couple of weeks and it comes screaming back into profit, like everything's gonna be awesome. I think that, the way that this is why this session is so fun to do, because we have different approaches that are all going to find ways to carve out some profits for the week or whatever we're positioned to do.
Yeah, Tyson and Chris, would you suggest this more directly to Tyson, right? Knowing and understanding, because you've got Turning Point, right? And the Turning Point Max, the word Turning Point resonates with me because I love looking at turning points within the market, right? And so in order to be able to identify the long-term outlook, really gives traders that are doing short-term trading a higher probability of success, because when you know that you've got the big dogs behind certain moves, all right, then finding those turning points in the market and then looking for short-term opportunities on the downside or the upside, depending on where the turning point is, really brings in a lot more success in the traders' short-term strategies. Don't you agree?
It does. It not only brings in more success, but it also brings in more confidence. Because we all know, the markets wave. And that's what's like the most beautiful thing about the currency markets is we can look at any pair, and a pound CAD as an example. A pound CAD's, this is theory, what but in theory, it's never going to go to 10. It's never going to go to 0. It's going to oscillate between extreme highs and extreme lows. And so you and I's job is to, pinpoint those entries. And so if I know I'm trading around turning point lows and I have all these other institutional, things in my favor, then deploying those short-term strategies and not being so emotionally overtaken if I take a loss or I'm in a couple losing trades, as long as I'm not over leveraging, I still have some room for margin. Just take a breath. The market's going to turn. We're going to be all right when it's all said and done, but you got to be patient. You got to be willing to have proper expectations, but you're 100% right. Trading around turning points, around institutional levels is key to my trading. I think it's key to all of our trading.
Yep, absolutely. I'm going to leave it with one more thing for you guys, and this is not going to be a long conversation, but we have to look at the U.S. election right now, and from not a political standpoint, from a trader's perspective, right? And that's what we do. We're not political guys. We're just really looking at the market from a trading point of view. Everything that's going on right now in the U.S. election, how do you think, and I'm going to go with Tyson first, and then we'll go with Chris, what do you guys think about what's going on right now with regards to the uncertainty about the way the election was taken, and how is that going to affect the stock market right now in the next between now and let's say the 20th of January?
Yeah, that's a really good question. It's hard to answer. I don't necessarily think it's going to have a huge impact. I think it's going to have a drastic impact on our world in the next 3 to 4 years, because whether you think there were shenanigans or not, there's a whole lot that needs to change, because there's a large group of people out there that see some smoke, and where there's smoke, there's typically fire. And so what does that mean? Are they just going to line up in 2 years in midterm elections and just vote like, hey, yeah, I'm going to go to the poll, I trust it? Or what's going to happen? I think what's going to happen is, and I don't want to get real bleak, but I think that it's darkest before the dawn. And I think that this is all leading, hopefully, one of two ways: either to massive government and corporate takeovers of all people in all aspects, or freedom reigns. I don't know which one's going to win. I think January 5th, the Senate election in Georgia is very, very important when it comes to whatever side you want, whatever side you're on. I think gridlock is typically fairly good. I think they're all in the same boat, and it's not that pretty of a boat, but gridlock at least is covertly different. Or at least looks like it's different. But so I don't know. It'll be very interesting. I don't know. I don't think it's going to really matter. We'll see on January 5th how it goes. If Trump pulls it out somehow, that's a deeper conversation. So I'll just
but coming back from a trader's point of view, what do you think about the stock market and even say, let's say, the dollar index? How do you see the dollar index and the stock market dealing with both the scenarios? Because I think that if there is fire, let's investigate and see. If there's smoke, let's investigate and see if there's fire, right? And if there's fire, let's kill it.
As far as the stock market goes, I think no matter what, I think they know people are getting really fed up, and they're kind of at the point, and I don't think they want to push that over. So I think it comes down to the stimulus. I think it comes down to what's going to happen with that more than what's going to happen in the election. Once that all plays out, once January's gone, we know what's happening with the stimulus, then we'll start to figure out how this all plays out. But right now, I think if we get more money put into the system, then that money is going to find its way to the stock market. Stock market's going to go up.
Yep, I was going to say the same thing. I mean, I'm looking at December 8th is a deadline. December 14th is a deadline. I don't think that what we mentioned earlier with December 11th is a government shutdown to avoid that, tying in a stimulus round 2 package, probably in order to avert the shutdown and pat themselves on the back before holiday break for Congress. Right now the market doesn't want anything to derail it. And so unless politicians are going to be blamed for it, I don't think the election right now is going to be a major catalyst until 2021. And maybe it's January, maybe it's Q1 of 2021. But right now, I think the markets are focused solely on COVID, vaccine, sentiment, and maybe this U.S. government shutdown to see, like, if they really mess up this week and we can't get a bill passed and we have furloughs for U.S. government, then that's a pretty big I'd say shot in the foot, slap in the face. Like, that'd be really disappointing for the markets. But again, it's like the markets have shrugged off a lot of terrible stuff and continue to do so. So I just think at the end of the day, like, like Tyson said, I mean, looking at how you're positioning yourself, I mean, I think in the right sectors and the right stocks and the right opportunities, there's still going to be bullish growth. But I also think, I mean, I mentioned this in my weekly outlook. It's like if you have ridiculous profits from running this year, I mean, in your stock portfolio, if you're long call options, it's like you should have a lot of opportunity to protect profit. So I'm a big believer right now of move those stop losses into a dollar amount that you're going to be like, you know what, if I get knocked out right here, I'll be pretty happy, but it's all playing with house money. Move your stop losses to trailing percentages. Like if the market dips 10%, I'm locked in for all my profits. Like don't give back.
Sell calls, collect some premium, be okay with the upside. Yeah.
Yep. So it's like it's just being smart. Like if you've had opportunities to make money this year, protect it, because like we saw back in March, you can do a lot of things and have it all disappear. Like one nasty spill in the stock market could wipe away trillions of dollars of wealth and trillions of dollars of earnings. And this, 60% rally in the NASDAQ could all of a sudden be back to single digits. And that's completely out of our control. So, I mean, we have to make sure that we're protecting our profits and, using our cash and margin soundly. So, but to answer Gary's question, I'll come back to that. I don't think the election is really going to play in as a factor right now. I think it's going to be, the next 30 to 60 days where that becomes more front and center. But right now it's on the back burner. Right now it's COVID, it's COVID relief package, it's government shutdown, markets, Santa Claus rallies underway. We found a way to somehow keep going higher through one of the most, confusing elections we've had in a long time. And the market's just like, it'll deal with it later. I think it's kicking the can down the road, and it'll face, maybe when we swear in either a current president again or a new president, that's when the market's going to have to take a hard look at what's happening.
It'll for sure matter, Gary, but I don't think, as Chris said, it's not on the front burner right now. Once it becomes on the front burner, it'll be massively important.
Yep.
Okay. Let's agree to disagree. No, I'm just kidding. All right. No, I agree with you, but I do feel like next week there's going to be some definite news that's going to shake the markets a little bit. If it's not going to be in one direction, there's certainly going to be a lot of volatility coming out next week. That's my belief. I do believe that, yes, COVID is obviously the greatest concern. The vaccine is definitely a concern. Not a concern, but of course a priority. But I think there's going to be some shake, rattle, and stir next week. I don't know. Let's talk about that in the trading room.
Yeah.
All right, traders. Well, thank you. We'll see next week. We'll have a conversation next week. We'll definitely speak about this next week. All right, guys. Well, Chris, Tyson, appreciate it. Your views are absolutely awesome. Thank you for sharing, and we'll see everyone back again next week. Traders, for those that have not liked, shared, or even become a subscriber to the channel, now's your time to go ahead and do that. Go ahead and hit the like button. Go ahead and smash the like button for us. That'll be awesome. Also, make sure that you subscribe to the channel. We'll be posting videos every single week. We want to make sure that you guys get the notifications as we go ahead and broadcast. So with that being said, we'll see everyone next week. All right. Thank you very much. Appreciate it, everyone.